Hi everybody, it's your friend Ryan Rolfe with the Dsmsold team at Keller Williams Legacy Group here in Des Moines in Central Iowa. And it's Monday, so it's time for another episode of Monday Market Update. Let's jump in and talk a little bit about what is happening in the real estate market. So if you've been following the news, you've likely heard that the Federal Reserve lowered their benchmark rate by half a basis point. And while a lot of people think that that directly impacts mortgage rates and that mortgage rates go down because of the Federal Reserve change, that is actually not true. So the Federal Reserve has to do with banking services, and mortgage rates are based on mortgage-backed securities. So what tends to happen as rates go up and down, or the Federal Reserve is planning to potentially reduce the rate or increase the rate. The speculation around that is what causes trading for mortgage-backed securities to go higher or lower, which impacts mortgage rates. So though interest rates have been following the Federal Reserve rate decrease, they're not directly tied together. So what we're seeing in Central Iowa, which is actually better than across the nation, is that on average you can get a conventional loan at about 5.5%. Again, that's all dependent on your credit score and lots of factors. So it may be higher than that, but they are definitely lower than they were. About a year ago at this time, we were almost hitting 8%. So definitely 5.5 to 6% is a lot better than 8%. That's for sure. For FHA, VA, and USDA mortgages, those are hovering around 5%, still above 5%, but around 5%. Again, as I mentioned with conventional loans, the same thing goes there, based on programs and grants and what have you, your rate may be higher than that. Of course, I'm not a mortgage lender, so I'm just sharing the information that we have from our mortgage partners. So if you've got questions about what your rate might look like, feel free to reach out. Always happy to answer that question. And what does that mean for home buyers and home sellers? Well, home buyers, you might see a little bit more competition out in the market, and yet home sellers might see this as a reason to put their homes on the market. We're getting very close to having 4,000 homes at all price points, all locations around the metro available on the market. A lot of that is because we're continuing to add to the inventory. Usually this time of year is where we start to see decreases in new homes coming on the market. But with interest rates, it looks as though more individuals are placing their homes on the market, kind of just realizing, hey, rates aren't going to get, they're not going to go up drastically or down drastically. This is what it is. This is pretty normal. We're not really likely going to see the 2 and 3% again. That was really due to COVID, and so people are realizing, hey, this is a pretty normal, pretty comfortable rate. So we're ready to make a move and sell our home, maybe buy a new home. So there's more inventory coming on the market, and fewer pendings is also leading to that number rising. Yet pendings are continuing to increase, and we might actually see those towards the end of the year outpace the number of pendings that we had last year at that given time. Again, pendings overall may not outpace last year, and yet we might see going later into this year where the pending sales typically go like this, they might go like this because of interest rates. That being said, with lower rates and potentially getting buyers back into the market and home sellers feeling better about putting their homes on the market and getting them sold, we're likely also to see our numbers increase for closed sales. This year, so far, we have been trending behind 2023. We're not terribly far behind, but we are a couple hundred homes less than what had been sold at the same time last year. And so with rates coming down, we might actually see that go up and outpace what we did in 2023 in a little different way, because usually, we're seeing that really throughout the year, but this year we might be seeing it at the end of the year with lower interest rates. Again, time will tell. Nobody's got a crystal ball to say whether or not all of the interest rate changes and other things going on in the economy will have an effect in a good way or negative way for home buyers and home sellers. And yet, again, if you're a home buyer, you've got more options now. And as a home seller, you definitely, you've got more competition, but then it's just all about how are we preparing your home so that it shows in the best light possible on the market, through staging, through pricing competitively, and making sure that we're doing the marketing activities that are going to help you get your home sold. So this past weekend, we saw 183 new homes come on the market. 109 homes went into pending or under contract status, and 103 homes sold and closed. So that's all I've got for you this week in Monday Market Update. If you've got a question about what all of this means for you, feel free to reach out. We're always happy to answer those questions. And hope you have a great week, everyone. Thanks. Bye.